Hello everyone and welcome back to Southern Wealth. I hope you guys are doing very well. If you do enjoy the content, please consider dropping that like and subscribe. As you guys know, it greatly helps the channel. Now, for the upcoming week, a lot of things are actually quite material, and I do expect quite some fireworks, if you will, after the previous week, which was extremely volatile. And this one, I do on there's a big part of me that expects a more traditional week, but there are a couple of things that can happen. I would say most of them positive, but one particularly negative that could really derail the markets. Now, as you guys know, in my view, currency debasement is inevitable. Either it comes via deficit spending, or it comes via the central bank, or it comes via a combination of both. And we've seen the tariff discussions, we've seen the tariff announcements and the tariff escalation. Now, Trump has removed tariffs on smartphones, cell phones, smartphones, computers, stuff like that, which targets which helps, as you can imagine, companies like Apple, Dell, etc. I wouldn't be surprised if you would see some sort of announcement in the next few weeks. Apple already announced an investment of half $500 billion in the US. I wouldn't be surprised if other US-based similar companies would announce something similar. Not necessarily $500 billion, but sizable investments in the US. That's my feeling. Let's see what happens. So what could be the good things happening this week? I think sometime this week, just a feeling. A little bit like when I told you that I thought, when I told you weeks ago that I thought last week's going to be the bottom for stocks and crypto. I get the feeling that this week, the first trade deal, at least the first, will be announced. And then the games really begin. Because then you have the incentive to get into the front line of negotiations to ensure that you can deal with the maximum leverage. Why? Very simple. If the US signs deals with, talking about meaningful countries, right? With all due respect, I'm not talking about Cambodia here. Not because Cambodia is useless or anything like that. It's because the relationship on the great scheme of things between US and Cambodia is not really that important. I'm talking about, in these trade things, it's really Japan, South Korea, Canada, Mexico, China, European Union, Taiwan, Thailand, a little bit, Vietnam, and I would say around Australia for the commodities. So these are really the big ones. Then you have the smaller ones, obviously. The issue that happens is if one of these deals is signed with Taiwan, for example, or with Japan, then it creates a sense of urgency in all the others, because the more trade deals are secured with the big trading partners, the less leverage the other ones who are not signing have. Because if the US has secured enough deals in which it can well live without with keeping the majority of tariffs in, for example, European Union, then that becomes a big issue. So that can be the positive thing, which is the trade deals being signed, and they can have not just the tariffs being brought to zero, but contemplate things like investments in the US, other trade barriers like needing to enter the country with joint ventures, lower regulatory requirements, easier access to local funding, whatever it can be. You guess, I am guessing as well. So the point here being, and this is what really pisses me off about these economists and financial experts and the Peter Schiffs of this world, is that we are in the middle of very serious, potentially transformative negotiations. I think there's a very good chance that we're going to look back into this period of time. And it can really be the renaissance of America if they really sign some very good deals. So when people are so quick to declare America finished, I don't understand how can you have that level of certainty. I don't. I'm not sure if the deals are going to be good. I'm not sure if the deal's going to have the effect intended. What I know is very simple. If he negotiates and signs deals that makes, so let's say America's situation is here. Here is better, here is worse. If he signs, if he fails to sign a deal, and basically America stays in the same place, or worse because it lost some credibility worldwide, then it's obviously a massive failure. If he brings America from here to here, now with some countries he will be able to get more, with other countries he'll be able to get less. It's really that simple. Because not all other countries are not all countries are in the same position, in the same boat in terms of strength. So obviously the strongest countries will have some more room to dance. Other countries will have less room to dance. Very simple. I mean, countries like Canada, in which its GDP has collapsed versus the American over the years, in which the sitting prime minister had to leave because it had historically low approval ratings of all time. I think it was less than 20% at some point, Trudeau. And then 75%, their number one client is the US, with 75% of your exports going into that client. Of course, you're not in the same position as as a Spain, for example, who's been doing quite well as of late. Although the Spain will be in the European Union, but like a Switzerland. For example, Switzerland is a very strong country. So I know it's a small country, that's all true, but it's a fairly strong country. So, and usually the people that do business with the Swiss from the US side are very wealthy people, so they will probably can accommodate the tariffs, no problem. But the issue is, these things are very volatile in nature. These things are, it's a huge chess board with a lot of pieces moving. So to have definite / arrogant, adamant positions on this is very, very stupid in my view, because the likelihood that you're going to get, can you imagine if in a year's time yields are low, dollar is fairly stable? I mean, as I've said, the dollar has been trading in the range for like forever. 85 or 80 to 85 to 115. That's it. It has been in this. Then some stuff happens that pushes the dollar above the 100 levels, and then something happens that pushes the dollar below the 90 levels. And throughout all that period, inflation has actually been quite low. So for all of those, the dollar is too weak, so we're going to have inflation. Really? Go check the decade of the 2010s, where the dollar was on average low 80s, and the inflation was on average 1.5%. Again, these are a lot of moving pieces. For example, would tariffs be inflationary and be very penalizing for the consumers of a country, for the population of the US, for example? It depends. If the tariffs lead to a price increase of 8%, but their salaries went up because a tax bill was approved, and now their taxes are down 15%, they may be better. The tariffs can add a 10% component of cost, for example, but then if you cut regulations that cost a lot of money to corporates, then maybe you can actually eat it up. If rates come down and companies can finance themselves cheaper, because the Fed is back to QE, so the rates are coming down, and now the corporations can fund themselves cheaper, maybe that cheaper funding, cost of funding, will help with the extra cost of funding in the tariffs. Maybe as commodities come down, like oil, copper, lumber, etc., and that impacts the entirety of the economy, not just some segment, then maybe prices net can come down. My point is, these things, again, it's not tariff 10%, CPI is now 10%. This is not like this. Although, despite what all the economists and financial experts make you think. Now, the issue with the Fed, and I'm suspicious that Powell may end up getting fired, because there's been trying to use some old laws to do that. I'm not a big fan of it, and I'll tell you why. Because one day the president can be Ocasio-Cortez or Gavin Newsom. Can you imagine them with 100% control over the Fed? Can be a complete disaster for the US. So I'm not necessarily a fan of it. The Fed should already have cut rates a while ago. Inflation, CPI, PPI is coming down dramatically. If you look at true inflation, the US inflation is below 1.5%. The rate should have been coming down very quickly. And by the way, that will actually cause even more disinflation, meaning inflation will come even more down. And again, I just saw a video of a guy. He has thousands of followers, and people say, the Fed doesn't want to cut rates because that will lead to inflation. Again, China has been cutting rates non-stop. What are they fighting? Deflation. Who, throughout these periods of high inflation, which country in Europe had the lowest inflation? Switzerland. Which country in Europe had the lowest interest rates? Switzerland. The European Union had interest rates at zero or negative for 12 years, and they printed 45% of their entire GDP throughout that time period. What was the average inflation? 1.1% per year. Japan has been printing money for 30 years. What has been the average inflation over the last 30 years, except when the war started? 0%. The US balance sheet of the Fed balance sheet doing QE went from 800 billion in 2008 to 8 trillion by 2020. 10 times. With rates at historical lows most of the time, 0 to less than 2%. What was the average inflation? 1.5 to 1.6%. How does that compare? It's historically low. Again, the ECB has been cutting rates. The Bank of England has been cutting rates. The Bank of Canada has been cutting rates. But particularly if you look at the ECB, they've been cutting rates now for months. Every month they cut rates almost. What is happening to the Eurozone inflation? It's sharply down. Again, learn. It's okay to have that belief before you see it happening. But after so many examples, across multiple jurisdictions, across more than a decade in time, it's time that you learn. Money printing and cutting rates and expanding the balance sheet, which is doing QE, does not necessarily mean CPI style of inflation. Meaning, it doesn't really affect the inflation that you see when you buy a train ticket, or when you buy a plane ticket, or when you buy a computer, or when you go to McDonald's. Where you really see the inflation is in asset prices. Is when you try to buy a house that used to be like 200K 5 years ago is now 600K, and it's the same freaking house, just older. That's where you see the inflation. Why don't you see the inflation in consumer prices? Very simple. Around 3/4 of the population in the developed world lives paycheck to paycheck, or lives already with quite a lot of debt. So when they go to the bank and say, hey, I've heard that interest rates are very low, can you lend me 100K? The bank says, no, you have 2 mortgages, a student loan, a car loan, a home loan, and credit card debt. Get the F out of here. Oh, Mr. Musk, you want $100 million? Sure, here it is at 1%. What do you think Elon Musk does with it? Oh, he buys assets. Or I'm saying Elon Musk change with the top 20% of the population. So that's why when you look at the chart of wealth inequality, you see something like this. So the top 20%, they get all the benefits of the low interest rates, and what do they buy? Assets. Why? Let's say that I give you $1 billion. Are you going to start eating 10 dinners and 12 lunches and drive 8 cars a day? No. So you actually don't create that much inflation yourself. Are you going to buy 20 types of clothes every single day? No. So the fact that only the top 20% gets it, and the banks are the gatekeepers in the middle, this is why you don't see inflation. So no, if the Fed starts cutting rates, you're not going to see inflation. Probably you're going to see accelerated disinflation, because what is interest rates? Interest rates are the cost of money. Who bears that cost? Everybody, particularly companies. So if I'm a company and I need to fund myself, I need to go issue debt to fund my expenses, my expansions, my salary, whatever. And it used to cost me 2% and now costs me 6%. Who do you think pays the extra 4%? You and me. But if that cost goes from 6 to 2, who do you think benefits? You and me. And people say, oh yeah, but if they print rates and lower rates, nobody saves money. Nobody's already saving money. That's the point. Everyone is already too much in debt in the West. And a lot of people, the majority of the population, has barely any savings. So no, if you actually lower that cost, It just means that companies can now fund themselves cheaper, which means you and me can actually benefit from having lower expenses, lower prices. Yeah, but is that fair? Because then 20% of the population is getting better and 80% is going nowhere. I'm not saying it's fair. I'm saying what's your alternative? With the levels of debt we have, if you let interest rates go normal, let's say go unchecked, then the entire country goes bankrupt. And instead of having 20% living well and 80% living less well, you have 100% living really bad. So what's the solution? The solution is we grow so much that debt stops meaning a lot. Why is $36 trillion in debt relevant? Because the GDP is around 30 trillion. If the GDP is 130 trillion, 36 means nothing. That's the hope of AI, robotics, and the likes, is that productivity and growth will outpace so much the debt that this transition period from 2008 until, 2035, for example, was a way to avoid having a huge Great Depression. And for all of you, like Peter Schiff, for example, who defends that we should just let everything go bankrupt and the chips will fall where they may, people forget not even the wisest can predict all ends. Not even the wisest can see all the outcomes, as Gandalf has told us in The Lord of the Rings. You see, it was the Great Depression of 1929 that was adamant for a certain German person with a funny mustache to win an election in 1933 that then dragged the world into a massive conflict that lasted from 1939 to 1945. But it was the Great Depression that allowed that to happen, because with the Great Depression happening and the US accelerating collections of debts from the Germans, you had hyperinflation. But you see, in the late 20s, the so-called Roaring 20s, Germany was up and running, and that party to the where that guy with the mustache belonged to was completely discredited because they were predicting a massive crash and a massive economic downturn in the middle of everything feeling hunky-dory. And then the Great Depression happens in the US. They look like geniuses and prophets. They get elected. Yes, they got elected. They got elected, and the rest is, as they say, history. So be careful what you wish for when all of the things collapse. So this is where I'm become different from the majority of the gold bugs and even the crypto people, in which, and the Fed, let the Fed go to zero, the central banks are a complete bunch of buffoons. Maybe they are, maybe they aren't. We don't know what would have happened if they hadn't bailed out everybody in 2008. It created a huge issues of their own, I agree, but what would be the alternative? Do you know for sure? I don't. What I'm trying to say is when you look back in history to 1929, you can see what an unpredictable outcome came from something that happened in the US in that fatidic month of October of 1929. So this is what I'm trying to say. Be careful, because every time that I see these economists, experts on CNBC and Peter Schiff and Harry Dance with all this level of certainty on things, it really makes me think, oh my God, how the F can you be so certain? You don't even know the duration of the tariffs. It's going to be a month, 3 weeks, 2 months, half a year. Maybe it's going to go to zero next week between countries. And now what? Where is the inflation now? You see, this is the problem. Be careful. I'm not trying here to say that I know exactly what's going to happen, because I don't. And so I take things step by step, and I ask myself, is it more likely that we're going to see currency debasement, yes or no? In my opinion, yes. Okay, then to me, it's clear the asset to be in over time. Maybe not in the next 3 months, maybe not in the next week, maybe not in the next 3 days, but over time, it's very clear to me. The only thing that actually concerns me about the market, it would be mostly short term, but it would still concern me quite a bit, is if the conversations between US and Iran don't go well. And I see very few people talking about it. That to me is much more concerning than anything else. So I'm going to hope I've heard that the first conversations went very well. I think the second round is going to happen next week. I really hope they find an amazing solution. Both parties are happy, and we don't need to see really bad stuff happening in that region once again. And with that, I wish you a lot of strength, positivity, and good things for the upcoming week. And don't forget, like and subscribe is the only thing that I ask. And I'll catch you in the next one.